Hello everybody and welcome to this week's Markets to Watch from Smack the Markets for week commencing the 9th of March. So with the continued spread of the coronavirus over the weekend and the pretty dramatic events, of course, with large regions of Italy being quarantined, the state of emergency being declared in New York, and the continued spread, of course, in the UK as well, it was pretty much expected that the markets were going to open in negative territory at the start of this week. Having said that, the size of the gaps that occurred in the markets on the opening price and the subsequent continuation of the sort of negative moves on many markets have been quite sort of extraordinary. So we're left this morning in the European session with some huge gaps, some huge sort of structures within the markets that are now sort of broken. So the question is now, what now for the markets, and what sort of opportunities might we be able to look at going into the start of this week? So let's take a look at a few markets here that we're keeping an eye on in the trading room. Now, of course, the first one being oil here. Oil has had a huge move, not just really on the basis of the coronavirus, but also on the back of a breakdown between agreements with OPEC and Russia. And now what we've had is after already the markets crashed on the oil markets crashed on Friday, we've had another huge crash, of course, here, sending oil prices down to levels, well, that I've not really sort of ever seen before, down to, I believe it was around $25, $26 a barrel and at the lows. So at the moment, we've got this huge gap in the market. We can look at this from two perspectives, a fundamental perspective, but also a technical perspective as well. Now, from a fundamental perspective, there is a sort of a battle going on between Russia and OPEC at the moment, and the Middle East, and that's sort of not looking particularly sort of helpful for higher prices in oil. However, from a technical perspective, we might expect at least some of this gap to be retraced and filled within some sort of context here. So I'm not even looking for a full gap close here, even though we might get something like that eventually. I think there could be a sort of a fairly easy move here to get something like at least maybe a 50% sort of gap fill from this sort of move, and that sort of brings it up to around that sort of like $35 a barrel level here, possibly even back into a bit sort of further around that sort of $38. So the sort of time frames and the sort of things I'm looking for here is particularly if the market sort of gets above that, perhaps if I go back to that 4-hour chart, above the level where it opened and peaked last night. And once it sort of gets above there, then I'm starting to look at potential sort of moves to the long side. And those are really going to occur when we get down to these lower time frames. So again, if we come down to time frames here, like on the 60-minute chart, you can see that we've got sort of a turnaround here. And, again, at the moment, the market hasn't sort of got above those areas, but some sort of technical levels in here, looking for sort of moves up towards these sort of pivot points is the sort of thing that I'm looking for. Now, if we come and take a look at the US indices and take a look at the Dow, for example, first of all, now again, we're going to have to come up to some very high time frames at the moment. If we take a look at the weekly chart, the market here last night opened and sort of came down to the lows, the previous low here of the recent sort of crash. So it sort of hung around that level there, and that's where the futures got sort of frozen. So that sort of area was quite a sort of a significant point here, and we'll see that on the lower time frames. So that was around sort of around 24,900, in fact, was the sort of level I had marked in my charts. Underneath that, it meant that the crash of the coronavirus crash that we'd seen already in equity markets was extending further, and that's now started to happen already. So taking a look at this, we've probably got moves down, or technical structures down to around 24 280, and then down to around these lows down here, which is around 23,300. Now, these levels here, I'm not really expecting them to be strong enough to and significant enough to hold the market. I wouldn't be at all surprised if we start to get moves down here towards these lows in early trade this week. Now, again, if we take a look at this on the 4-hour chart and forgive the levels in here, you can see the 25,000 level. You can see that the level just underneath here, which was around that sort of 24, just around underneath that 24,900. Now the market's underneath here. So now we're into fresh new lows on the back of the coronavirus condition. So now pushing down even sort of lower. Markets here are likely to be very volatile once the sort of cash market opens. And, for that, it's wise to be very sort of careful and manage risk accordingly. Overall, I'm expecting sort of lower prices, but they could be extremely volatile journeys to get there. If we take a look at gold as well, now obviously we've seen a rush into safe havens. We're seeing a risk off sentiment at the moment. Gold here has had some rather sort of interesting price action. The one level that I've been speaking about for a long time, as you've been maybe sort of here on these newsletters, is the 1.66 level. So this sort of structure level here on the 4-hour time frame. Now, we've had some nice trades. Once the market sort of gets above this level, what we've seen now is that the market gapped over the weekend. So it actually gapped higher, and now it's pulled back down to retest that level. Now, if we come back up to the monthly chart, the reason why the market hasn't really sort of moved as much as the other markets is because it's already had a very strong run. It had a very good run on Friday, and it's also sort of come up to some real sort of key technical levels. Having said that, with what's sort of going on in the world and the extreme volatilities that we're seeing, I wouldn't be at all surprised if we start to see gold move up here and break through this level and sort of test towards the high side of these all-time highs on the charts. So that brings it back down to this sort of structure level as being a very interesting sort of price point for me. So 1.660, I'm looking at potential sort of support around that area. Also brings it back into the sort of recent trend structure if this can hold on the 4-hour time frame. So again, at the moment, looking at trading opportunities around here, looking for support around this level. If we get that, then I'm looking for opportunities to trade gold to the long side. Now, other markets that we might sort of consider at the moment are things like some of the yens, and one that I'm favoring is Kiwi yen at the moment. Again, a lot of these markets, a lot of these forex markets are looking sort of very stretched. We can see that we've had huge moves in these markets, and this is only since Sunday evening. So at the moment, we've got huge gaps in price action, and also we've had big retracements so far. So you can see here on Kiwi yen, we've got a bit of structure here on this market, coming in around the sort of lows here on the daily time frame, and that sort of pretty much sort of closes this gap here that we have at the moment in the chart. Now, not even looking at targeting those gap closes at the moment, but what I am looking for is opportunities maybe to trade this market long. I've already taken a few here on this market already, and again, if we look at this on the lower time frames, you can see that the market started to react a little bit more technically, finding support on these pivot points. We've got sort of general trends starting to form here on the lower time frames. So again, just looking at moves in step-by-step sort of places. So moves up towards the pivot point here where we've had previous lows as first move, then looking through the range here to the top end of this range as the second, and then looking for a move up here towards the level up here, which would bring it not quite to a gap close, but you can see that we've got a pivot point all the way through there. That's 66.65. We've got also previous lows here tested multiple times and a pivot point today. I think that's extended sort of area, and that would be certainly be enough to the long side for me if the market could get up there. So there's a few opportunities here that we're keeping a close eye on in the markets. Obviously, things are looking sort of rather battle bruised at the moment, and it is about sort of finding good technical places for the for your stop positions, and also managing risk very, very carefully. So there's a few markets there, a few opportunities that we're keeping an eye on in the trading room at the start of this week. I certainly hope it helps, and look forward to speaking to you next time. Bye for now.